Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. President Trump signs an executive order sanctioning International Criminal Court officials who investigate the U.S. and its allies. Cautious approach. U.S. Treasury Secretary Scott Bessent tells Bloomberg he favors a strong dollar and has no plans to tinker with debt issuance. And a moment of calm. Investors await the U.S. jobs data later today as focus briefly leaves the drama over tariffs. A weak print could boost expectations for further Fed rate cuts. It has just gone 8 a.m. across the Emirates. I'm Joanna Versace in Dubai. Well, we made it to Friday, everybody. It feels like an achievement. It was such a long week. But interestingly enough, if you pan out just a little bit, S&P and NASDAQ are actually positive for the week. Despite the big drop that we had on Monday with the tariff scare, the S&P is up about 0.2% for the week. The NASDAQ up almost 1.2%. So quite the comeback there. So I thought that was interesting to note. Today, futures aren't doing a whole lot. As we spoke about in the headlines, NFP is going to be a big focus for the investment community. Remember, last month we had that really high number. It was a bit of a shocker. This time around, expectations are for a sub 200K print. But still, given the amount of positioning clean out that we've seen in U.S. Treasuries, in the USD, perhaps the bar is a little lower for a hawkish surprise this time around. So that is the where markets are trading into NFP. 10-year yields, I just mentioned, have rallied a lot because of the positioning clean outs. We were getting closer and closer to 5%, but in the past couple of weeks, things have really turned around, now trading through 4.5% to the downside. And then Brent, it has been a negative week for the energy complex. We are down 2% in the last 5 days. This is its third week of declines for oil. And this because there's a bit of a tussle going on between, on one hand, the sanctions, the geopolitical implications of some of those new sanctions and potentially Trump's maximum pressure campaign against Iran. But on the flip side, tariffs, global growth, and all of that, there are concerns about what that could mean for demand on the energy complex as well. So the upshot is energy is 2% lower for the week. Switching over, I also want to draw your attention to what happened in the pounds yesterday. Well, we did have that Bank of England meeting, and there was somewhat of a dovish surprise because 2 members out of the 9-member committee actually voted for a 50 basis point cut. And one of those members, Catherine Mann, was one of the most hawkish members of the committee. So she completely flip-flopped from being one of the more hawkish members to actually voting for a 50 basis point cut. And what we did see was a drop in the pounds yesterday throughout the course of the session, stabilizing here. But still, the market was looking ahead to some of the forecasts that the Bank of England put out, especially vis-a-vis the weakness in the UK economy. Even though the Bank of England governor wanted to emphasize that the future rate cutting path was going to be gradual, the focus was on, number one, Catherine Mann, the dovishness that came out of that, and on the outlook for the UK economy. So that's why the pound came under pressure. But let's move on and talk about Asian markets as well. Our friend David Inglis is in Hong Kong today, helping us out and helping us make sense of all these markets. With David, one thing that caught my eye is there seems to be a lot of money pouring into Hong Kong and some of these tech stocks today.
It's still a deep-seek story, right? If there's any reminder, really, that the story is still well and alive, it's really here in Hong Kong, at least for today, right? And, you know, who would have known at the start of this week, to your point, right? The way we started out the week didn't seem as if we would end the week by saying Chinese tech stocks are actually now set to enter a bull market. In fact, on the Hang Seng Tech Index, bottom of the screens here, the level you want to watch is 5,077. And as you can see, we're about 130 points clear of that in the lunch break. Everything from hardware to software is leading these gains. In fact, you take a step back, if you measure the index, this one specifically, and I think we have a comparison chart which shows you this next, it's just the hype really that's driven that one up. We have an ETF that actually tracks AI and robotics listed here in Hong Kong. That's the line in orange right now. And really compared to some of the other benchmarks you really see it in terms of magnitude, how far up tech plays have actually taken this market. That's one story for today. The other one, I'll end in this. Just keep your eye on this, right? Nothing much to tell you about right now, but this can tend to be disruptive, not for today. But dollar yen, of course, has been strengthening or falling. In fact, at one point this morning, we did fall below the 151 handle. Just something to watch, of course, this Friday.
Yeah, watch, because also there's a correlation with the Nikkei as well. And I'm noting there's a bit of an underperformance for the Nikkei equity index today. And perhaps it's on back of the strengthening that we're seeing in the yen. David, great to have you with us on our show. David Inglis in Hong Kong. Now, over to regional news. President Trump has authorized sanctions on International Criminal Court officials who investigate the U.S. and its allies. That's after the court issued arrest warrants against Israeli Prime Minister Benjamin Netanyahu over the military campaign in Gaza. Meanwhile, the president has doubled down on his vision for the Strip with a post on his Truth Social platform, reaffirming he wants the U.S. to take control. So much to talk about. Bloomberg senior editor Bill Ferries joins us now for more. Okay, so let's maybe just start with the comments around Gaza, because that captured so much attention this week. Yesterday, it seemed as though his aides were trying to dial back or take back the comments that he'd made the day before vis-a-vis taking full control of the Gaza Strip. But now he's back again. He's doubling down. What do we make of his stance?
Yeah, you're right. There was really broad international condemnation of President Trump's first remarks about the U.S. taking control of Gaza. And then you had yesterday, that's all we were talking about were how his aides were spinning this a bit and really dialing it back, saying, no, there wouldn't be any U.S. troops. No, Palestinians wouldn't be forced to leave or anything like that. But the president kind of responding to that, again, on Truth Social, saying that that Gaza would be handed over to the U.S. by Israel at the conclusion of fighting, and that Palestinians would be moved to a place where they had nice homes and that was fully developed, while Gaza is essentially rebuilt. Not a lot of this is moored in the current reality, of course. Gaza, the fighting could possibly resume there. Hamas is still a force to be reckoned with. Israel says it wants to eliminate Hamas's ability to be a fighting force and a political force. So this is all very much in the theoretical, but it just showed the president perhaps a little frustrated that the ideas he expressed in that press conference with Benjamin Netanyahu not being taken as seriously as perhaps he wanted them to be.
Yeah. Well, President Trump, a fan of signing executive orders, signed another one yesterday. And this one was to sanction or apply sanctions on International Criminal Court officials over their investigations of Israel and also other U.S. allies as well. How seriously should we take this executive order, and also just put into context for us the relationship the U.S. has had with the ICC, because it has been up and down over the years?
Yeah, it has been up and down, although the U.S. has never been a party to the International Criminal Court. It's been a real source of frustration for Republicans in particular, who have been concerned about U.S. troops or U.S. officials getting subpoenaed or investigated over things like the war in Iraq, the war in Afghanistan. President Trump stepped up his pressure on the ICC. In his first term, I think he actually did sanction at least one prosecutor of the court then. I mean, this basically signals the U.S. won't be in a position to really even cooperate with the ICC, as the Biden administration and the Obama administration did to some degree during their term. So the U.S. really looking to rebuke the ICC for its attempts to investigate or go after Israeli officials, but just broadly signaling that they don't think this court has any validity and they won't be working with it in the future. Yeah.
Bloomberg senior editor Bill Ferries, thank you so much for getting us up to speed on some of the local regional stories that we're following today. Well, the Israeli Defense Force says its Air Force conducted a strike in Lebanese territory on 2 military sites. The IDF says these sites contained Hezbollah weapons, which is a violation of the ceasefire agreement. U.S. Treasury Secretary Scott Bessent tells Bloomberg he has no plans at the moment to adjust policies on dollar strength or debt issuance. It shows a cautious approach towards financial markets, even as the administration is rapidly upending the status quo elsewhere.
First of all, the strong dollar policy is completely intact with President Trump. And I was very happy at his Economic Club of New York speech in August when he reemphasized the importance of maintaining the dollar reserve currency status. But let's think about, what does a strong dollar mean? It really means 4 things. One, that when we think about a fiat currency, a piece of paper is credibility. So a strong dollar is credibility and a rule of law that is backing it up. 2, it means a composite price on the screen, the Bloomberg Currency Index, that is the dollar moving up against that. 3, it is a bilateral price. So what's important to remember is the dollar is either weak or strong versus something else. So we want the dollar to be strong. What we don't want is other countries to weaken their currencies to manipulate their trade. And then 4th, that we want to have the best policies that create the environment for a strong dollar.
Yesterday, the Treasury Department had its first quarterly refunding since you were confirmed. Do you have any plans of looking at how the Treasury's debt issuance strategy comes together?
Well, I think the good news is that the trajectory of the borrowing is dropping. So I was very happy to see that it's one of the few good surprises I was left by the previous administration. So the trajectory is good, and the government's well-financed into the 3rd quarter, and I believe that as it becomes apparent that the president's agenda is working, that we'll see a great deal of non-inflationary growth. And I think that will help us calibrate what the debt policy should be. But I don't foresee any changes in the issuance for the foreseeable future.
Mr. Secretary, I want to ask you if you have had your traditional weekly meeting with Fed Chair Powell yet.
We did. I did an away game over at the Fed. We had a very nice breakfast. Chair Powell and I don't know each other well, so it was very constructive.
How do you view that relationship evolving? The two agencies and buildings are supposed to work very closely together, and you've had some criticism in the past of his work.
And as I said at my hearing, everything I'm going to talk about is things that the Fed's done in the past. Prospectively, monetary policy, I will not comment on, and I'm sure he's going to do the right thing, so there'll be no criticism.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, relatively quiet moves out in the equity markets this Friday as traders await the U.S. jobs print later. A weak number could boost expectations of further Fed rate cuts. Now, joining us now is UBS Middle East CIO Fahd. Iqbal, good to have you with us.
Thank you.
Maybe let's just talk about the upcoming NFP print. The reason I bring it up is I feel as though positioning is perhaps a little bit cleaner going into this print than we had the last time around. Remember, we had that upside shock.
Yes, we did.
And the market took it very hawkishly. This time around, we have, on the back of the volatility in the market, seen it's a clean out of position, so to speak, in fixed income and in the USD. It feels as though the setup is for the bar being a lot higher for a hawkish surprise this time.
It is a lot higher in that respect. And yes, I would agree that there's been relatively better positioning today than there was back then. Arguably, there's still quite a bit of optimism, I would say, still priced into markets today, even now, but not as much as it was in December. The odds of a blowout number in NFP, as we saw in December, we think is a little bit more limited. Certainly, there can be an upside surprise. I mean, if you look at what our expectations are for inflation, for example, we do think it's still on a downward trend, but for the next few months, it's likely to be a bit more elevated than it has been in the past. And that same sort of trend, there's a potential read across in labor numbers also. You might see stronger numbers for the next couple of months before we start to see a resumption of that softening trend.
Yeah.
So for us, this NFP number will be important. It is getting a bit difficult to see whether we are still on that softening trend. The Fed also said as much.
Yeah.
And it may be for the next couple of months we do see a sideways kind of move in labor markets. But we do still expect that softening trend to resume later, leaving the Fed in a position to cut come June and September.
Of course, the big question mark is what happens with inflation and whether all of these tariffs and talk about tariffs will end up actually being inflationary for the U.S. economy. What is the House view there?
So we do think there's a one-off impact on inflation, but we don't see it being a sustained impact on inflation. A modest increase in inflationary pressure on a month-to-month basis, and we suspect the Fed will look through it accordingly. The problem will occur if you start to have a tit-for-tat response from other countries and you start to get engaged in a trade war, which is both inflationary and negative for growth as well. It effectively becomes stagflation.
Yeah, but the thing is, like, what we've learned this week is Trump starts with the initial stance, but that's not where we end up. It's all just part of the art of the deal, as he would call it, a negotiating tactic. So as a trader, your expected value is not the starting point. It's perhaps somewhere in the middle. How do you trade around that?
No, that's very true. And we have stated from the outset that a lot of this is likely to be a negotiating tactic. But I think in the back of our minds, in the back of the market's minds as well, there's always this what if, because we're not sure how much of it. We can't say with 100% conviction that, oh, this is only a negotiating tactic. There is this uncertainty that some of these threats may come through, and that's part of what is the unpredictability and the uncertainty that comes under the Trump administration. So, look, from our perspective, we are a wealth management company. We are dealing with wealth management clients. We're not looking to trade that short-term beat or disappointment on individual earnings data. We want to make sure that we're positioned in such a way that we are resilient and robust against these uncertainties.
Okay, let me ask you then, in equity space, are the themes this year different from last year? Last year was all about AI, massive outperformance for Magnificent Seven. Is that going to be any different in 2025?
To an extent, not hugely different. AI is still very much the investment theme of the decade for us. It remains an extremely important driver of markets. Is it going to lead to the same level of outperformance in tech stocks as we saw last year? That's obviously a very difficult bar. But we do see it being an important driver of markets overall. Performance is certainly spreading out. But even in the areas where we see upside occurring, technology and AI is still an important part of it. For example, on the utilities front, with the build-out of
data centers
exactly.
and energy. So my colleague David Inglis earlier on the show was talking about the money that's been pouring into Hong Kong and some of these Chinese tech stocks, the DeepSeek effect. Do you get the sense that any of your own clients are looking over to China and to Hong Kong Chinese tech opportunities because of the DeepSeek impact?
Certainly. To quite an extent, there have been a lot of investors sitting in Chinese equities waiting for this kind of a moment to occur. And there are others who are looking to now add to positions because they were a bit nervous before. And the DeepSeek moment for us is, for the industry, it's certainly a positive.
Is it a big deal?
It is a big deal. It's a paradigm shift. It's a game changer. Not least because, yes, the cost reduction that they've engineered, I mean, that's very much in line with the deflationary trends you see in tech anyway. What's different is it's coming from China for the first time. And for us, it's important because, A, it reignites this sort of competitive pressure for the industry, which we think is really critical in driving further innovation. So we're very excited to see what the leaders in the US, your OpenAI and so on, how they will respond. But B, it really opens up the segment massively, in the same way that, you know, Android opened up mobile phone applications in the mobile phone sector. We think it will lead to a wider adoption of AI, access for lower cost operators to be able to utilize AI services as well. So for us, it's broadly positive.
For the consumer, most definitely. Fahd, really good to chat to you. Thanks so much for coming on our show. That was Fahd Iqbal, UBS CIO of the Middle East. Thanks very much. Well, coming up, we unpack Amazon's earnings as it ramps up spending on AI. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Amazon shares fell in late trade after a weak outlook in its latest results. The e-commerce giant is still spending heavily on AI. Let's bring in our tech reporter, Annabelle Jewelers, for more. I had to look through some of these numbers, and one thing that stood out to me is they posted $20 billion in profits in the fourth quarter. That's double where they were the prior year, and yet still that wasn't enough to satisfy the investment community. What was disappointing this time around for investors?
Yeah, I think it's been a really consistent theme across the week, Jemana, that it really just relates to the outlook. I mean, of course, when you have these numbers that come through, a portion of it is always backward looking. And so investors are sort of thinking, what's next? And I was just listening to that interview we were doing earlier, asking those questions about DeepSeek and how significant that development is. And certainly it's something that came up in the earnings call. And tech companies as well have been trying to sort of reassure investors across the course of this week that they're aware of those developments. And they're also trying to downplay the risks of them as well to their business models. Something like AWS, for instance, again, that cloud business, it very much hinges on demand for compute power moving forward. And so, again, that revenue guidance, it came through, and net sales expected to be between 151 billion to 155.5 billion, so sort of softer than what estimates had been. And also something else that sort of played into it beyond these concerns around DeepSeek and continued demand for these sorts of services actually was the currency risks as well, because we had that strengthening in the fourth quarter. Again, that played into those results, but into the first one as well. They're saying that they're going to see $2.1 billion of headwinds from foreign exchange rates. And so, again, something that sort of was a bit of a dampener on the outlook for this period, but still spending heavily on AI, to note.
Yeah, well, Annabelle, I need to ask you about that huge number, $100 billion capex spending plans for AI. It seems like all of these big tech companies are trying to outspend each other on capex spending. We thought the Meta number was big last week, but then Amazon are coming out with $100 billion. How are they going to monetize this? Is that a question that analysts are asking?
Again, yes, that is certainly something that came into it, and also asked about, okay, that $100 billion, the company said, we're going to be spending most of it on our AI platform and our AI services. And they sort of tried to justify that because they're saying that this is really just the outset of something that is going to be hugely transformational over a longer period of time. So even though they're not perhaps seeing enough ROI just yet, and that has been a consistent theme that we've seen for a long time now from analysts and from investors, they're still doubling down on that. But at the same time, it was sort of interesting as well, going through the earnings call and what they sort of started off with as well, which was also just trying to talk about really sort of the bread and butter, or the original bread and butter of the business, which is the e-commerce side. And they also tried to play that up as well, because they were saying in the last reporting period, revenue increased 10% on the year, operating income as well, as you said earlier, up 61% year over year. Their speed of delivery continuing to accelerate. Lots of different things that they're trying to build up. But yes, AI certainly is still the key focus of the business.
Yeah. As ever, markets are very keen to hear what all of these big tech companies have to say about their AI plans and the outlook in that space. Tech reporter Annabelle Jewelers, thank you very much. All right, moving on, we're going to be talking about local fixed income markets. Our next guest says 2025 looks like an active and interesting year. Good morning. This is Horizons Middle East and Africa, our top stories this morning. President Trump signs an executive order sanctioning international criminal court officials who investigate the U.S. and its allies. Meanwhile, he has doubled down on his plan for Gaza. Cautious approach. U.S. Treasury Secretary Scott Bessent tells Bloomberg he favors a strong dollar and has no plans to tinker with debt issuance. And a moment of calm. Investors await the U.S. jobs data later today as focus briefly leaves the drama over tariffs. A weak print could boost expectations for further Fed rate cuts. It has just gone 8:30 a.m. across the Emirates. I'm Jolidon Versace. In Dubai, the main event later today is going to be that non-farm payroll print. Remember, last month we had that huge upward surprise with the number printing more than 200K. Today, the expectations is for 175K prints. But again, the market seems to be more moving, it's favoring a higher print this time around, given the strength that we had last month. So again, the bar seems quite higher for a hawkish surprise coming in from NFP. But this is how futures are trading into it. Slightly red, though, on the week. I should just point out that we are actually tracking positive. S&P up 0.2%. The NASDAQ up more than 1.2%, so have completely shaken off some of the tariff concerns on Monday. Crucially, though, not quite yet at the levels we were trading at that just before that DeepSeek surprise 2 weeks ago. So that's just a bit of context for where these futures are trading. 10-year yields at 4.44% continue to be stabilizing over the last couple of sessions. And again, Scott Bessent's comments vis-a-vis not changing the bond issuance outlook was reassuring to some of the bond investors. So sitting around here today. And then Brent tracking 2% lower for the week, just shy of $75 here on concerns about the global demand outlook. Flipping over, though, I just also want to flag one of our terminal charts today. And this one is in relation to the reaction that the S&P has typically on NFP days. And you can see usually it tends to do quite well. You tend to see a green bar on NFP days. Last time around, the S&P dropped 1.5%. So we had a very sizable negative reaction last time around because we had that huge surprise with the headline print. Is that going to be repeated today? Well, that's a bit of historical context for you. Okay, let's move on and check in on how markets in Asia are faring. David Ingles is in Hong Kong. For the most part, the handover seems to be positive, David. What's driving that?
And hopefully it remains that way these next few hours or so. I heard you mention DeepSeek, and that's really what's driving the story in the Asia Pacific. So, one of our guests from JP Morgan a few hours back pointing out, it's really broadening out the rally beyond computing into the likes of software, design, vertical sector killers, as they say. And as you can see, that's playing out across some of these names that, frankly, if you're outside of Hong Kong, you don't normally hear about, right? Gendy, for example, Xiaomi, of course, we know slightly more about that. Hang Seng Tech Index is on track to enter a bull market by the end of the session if things don't change. Flip the boards, please. You mentioned oil markets, and just to juxtapose that with the oil contract that's actually traded in Shanghai. And just to give you a sense, really, that the market is broadening out the rally across most Chinese assets, including China commodity listed contracts like aluminum and copper, just to give you a sense of that. Very quickly, so apart from the China story, decent but not a lot, I think is how I describe the equity market session in the Asia Pacific. In fact, you have the benchmark coming up on your screens right here. We are in the thick of earnings season over in Japan, so two names that are coming out with earnings these next few minutes or so. And of course, we have a rate decision coming out, should be any time now, and I think you guys are going to talk about that soon. Nifty index, there we go, down about a tenth of 1%. Jemana.
Yeah, we are actually waiting for the RBI decision. And I was informed it was going to come out 3 minutes after the bottom of the hour. It's still not out yet. So we are going to bring it to you when the decision finally breaks. Most analysts are expecting the RBI to go for a 25 basis point rate cut. Not out yet, but I will bring it to you the second we get an announcement from the RBI. The governor has just started to speak. Well, turning to the credit markets now, and after the start of the year saw a large sell-off in U.S. Treasuries, our next guest says the rest of 2025 looks like it will be very active and interesting for regional credit investors. Fady Gendy is Senior Fixed Income Portfolio Manager at Arqaam Capital. Let's just start with the backdrop, which is U.S. Treasury yields 10-year is back to around 4.5%. That appears to be some of an anchor in that market. A nice spot between 4% and 5%. Where do you think we go from here?
Exactly. I mean, to echo what you're saying, our view on the 10-year Treasury is that the range is 4.25 to 4.75, and we feel that at 4.5, it's right in the middle of that range. We were buyers of duration at 4.75 when we approached that 5% psychological level. But right now, at this point in the range, it makes sense to be neutral and sell the rallies and buy the dips in duration, and that's what we're currently doing.
Yeah, so I've seen the Bloomberg MENA index is trading at around 6%. This is the credit index. Do you think it offers value there?
Yes, absolutely. I mean, our key argument for MENA credit is on an absolute return basis, you're getting 6% yield at the start of the year. So this is a very decent carry to earn for a single A-rated credit, where the majority of the credits within the index are improving. They're getting rating upgrades. They're regaining market access, the likes of Egypt, Jordan, Morocco, and Oman. So the credit fundamentals are there. You're earning 6%, which is very good carry that protects you against any adverse movements in the 10-year Treasury.
What do you think the biggest downside is to the broad MENA complex here? Is it geopolitics? Is it tariffs? Is it global demand? Where's the
I think tariffs is more of a concern for the likes of LATAM and Asia, less so than the GCC, which also have a healthy and positive relation with the current administration. Yeah. I think the risk will always be around oil. Hydrocarbons is the main export of a lot of these GCC countries. And if you break, like we said before, the $60 level on Brent, that could cause some concerns for some of the weaker credits.
Yeah, I want to ask you about some idiosyncratic stories. I was just in Turkey this week. I had a conversation with the finance minister, Mr. Şimşek, and also a conversation with some international bond investors. One of the big trades there seems to be an extension of duration. For 2024, people were involved in this so-called short-dated carry trade because of the high interest rates offered. Now, there is a conviction that central banks have started cutting interest rates, and therefore you can finally start extending down the curve because the real yield becomes attractive. Are you in that camp as well? Do you see opportunities?
Absolutely. Turkey is an overweight, both on the hard currency side, less so on the sovereign, more in the banks and select corporates, as well as in the local currency. We were initially in the short end of the curve, but as the central bank started cutting rates, and now we've had 500 basis points of rate cuts, and a lot more to come over 2025 as inflation declines, we've been extending duration in Turkey to lock in yield and to gain the benefit from that rate cutting cycle, as we feel that the orthodox monetary policy is still in play. Fiscal policy is now supportive of a disinflation process in Turkey, like you said.
Yes, yeah. You're in that camp then.
Absolutely.
You think that the path is going to continue. Egypt also interesting as well. They've returned back to the market. So what's your outlook for Egyptian bonds?
So on the hard currency side, it was very positive to see Egypt return to the market after 4 years of being locked out. That was positive to see. They issued in size at 2 billion. The books were 5 times oversubscribed. So we liked, and they tightened pricing significantly on especially the 8-year tranche. So them regaining Eurobond market access is positive. We still expect them to issue again in the current fiscal year, this time in a Sukuk format, $1 to $1.5 billion. And we're also active on the local currency side since March of last year when you had that devaluation and the Ras Al Hikma deal. And like Turkey, we're again extending duration in Egypt to lock in gains ahead of a rate cutting cycle and a drop in inflation with the Fed print that's coming. Yeah,
so interesting, Fady. Really good to get your perspectives on some of the local opportunities, the regional bond opportunities. That was Fady Gendy, Senior Fixed Income Portfolio Manager at Arqaam Capital. Well, back to central banks. Bank of England Governor Andrew Bailey has cautioned markets against reading too much into how policymakers voted this month. The comments come after a surprise switch by one official prompted investors to boost bets on more interest rate reductions. Governor Bailey spoke to Bloomberg's Guy Johnson after officials decided to cut interest rates to a 19-month low.
The way I would interpret it is this. The sort of the set of things that we are going to have to judge every time we meet has just got more complicated, frankly.
Does that make it harder to make a decision to cut rates? Because as you say, it's symmetrical. You don't know whether it's going to be inflationary or deflationary.
It's going to give us a lot more to think about every time, and we're going to have to be careful in the way we do it. But it's meant to say, look, there is more uncertainty. Don't take from that a particular directional message, other than I still think the path is down.
Yep.
But the world is more uncertain.
Are you still trying to get to 100 basis points worth of cuts this year?
Well, I've never been trying to get to a number, actually. I mean, I'm trying to get inflation sustainably to target. That's my job. Right. Whatever path of interest rates does it will be the one.
Can you understand why the vote split looks dovish?
I can, but I would always caution you not to put much emphasis.
So it's not a communication tool?
It's not a communication tool. And the reason it's not a communication, we do not sit down and say, what do we want the vote split to be this time? Each member votes their own position. I don't know going in what the vote's going to be in that sense. The reason, and I always say, there's no groupthink on the MPC. People vote their own position. And I would encourage the market to read the minutes pretty carefully this time, because you will see a series of positions set out in the voting. There are those of us who voted for the cut, some of whom put emphasis on uncertainty and the word careful, some of whom wanted it to be a bit more directional and wanted the word cautious instead of careful, but we chose careful in the end. And then you've got the 2 members who voted for a larger cut, and if you read the paragraph that comes over, they're probably in different places themselves, so don't put too much weight on the voting.
The gilt market, at its core, really only cares about inflation. That's its kind of North Star. What's your degree of, let's come back to the word certainty, that the inflation hump is just a bump in the road? Given, as you just said, there are so many things that are uncertain at the moment, how can you be sure that that is a bump in the road that doesn't persist, and ultimately the trajectory is still there?
Well, there are two things that cause me to take that view today. One, it's not being produced by things that are caused by the underlying balance of activity, supply and demand. So it's not giving us a read on the underlying balance of the economy. It's being caused by largely administered and external market factors. Now, the second thing is, but you could say, yes, but it could still get built into expectations and persist, and it could. But what I would say then is that context is important. It is against the context of a weakening of activity in the economy. It's a context where the labour market has moved more into balance. So I think that's the right context to see it in as well. And that context then would tell you, probably more likely than not, it won't cause persistence effects. But we will have to watch it very carefully.
That was the Bank of England Governor Andrew Bailey speaking to Bloomberg's Guy Johnson after their decision to cut interest rates by 25 basis points. And now let me just move on to another central bank that has just come out with a key decision. RBI have cut their key rate by 25 basis points to 6.25%. That is in line with the market expectations. It was unanimous. 6 out of 6 members voted for that decision. And let me just bring you some more of the commentary that's coming through from the governor. As you can see on our screens, he is speaking now, saying that inflation is expected to moderate further in 2025, 2026. Growth is seen recovering from the lows of the second quarter. And of course, within India now, there is a lot of questions about some of the growth targets put forward by the government, as there has been a moderation of growth recently. They're saying that growth inflation dynamics opens policy space for growth, but global market volatility and trade uncertainty do pose risks. And that is in line with some of the commentary that we're getting from other central banks around the world. It even came up in the interview with the Bank of England Governor Andrew Bailey as well. But the upshot here is the RBI did decide to cut interest rates by 25 basis points to 6.25%. That is the reaction on the Nifty, slightly negative, as you can see from the boards shown there. And coming up, football diplomacy. We get the details on how Man City's legal troubles is affecting UK-UAE relations. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Persechi in Dubai. Well, Bloomberg has learned that the UAE has brought up the future of the Manchester City Football Club in discussions with the UK government. An Emirati royal bought the then struggling club in 2008, transforming it into an 8-time English Premier League champion that's also claimed European and World Club titles along the way. But its form on the field has slipped, and it's also facing 115 charges of breaching the Premier League's financial fair play rules, with judges in London now considering their verdict. The club denies the allegations. So for more on this and the ins and outs, let's bring in our Middle East economics and government reporter, Abid Abu Hamad. I'm not going to ask you about the football season, but I am very interested in this case specifically and how it's spilling over into diplomatic relations between the UAE and the UK.
Good morning, Jumana. So yes, let me start with the 150 charges that you just brought about, right? Those charges, if Man City were to be found guilty by the Premier League, those could lead to a bunch of consequences, right? One or the other, we don't know yet. The matter of, the verdict is going to come to us within months, within weeks. But that could lead to a relegation, that could lead to fines, that could lead to Man City's titles being stripped away. We don't know what the verdict is going to look like, but no matter what, the reputational damage for a club that is owned by Sheikh Mansour, who's the brother of the president of the UAE and has, is the chair of Mubadala, which is, one of the biggest sovereign wealth funds in Abu Dhabi. The reputational damages for that could be quite dire, right? But we don't know what it's going to look like, but we've spoken to multiple people on both fronts, both from the UK and the UAE, and they say that, look, this matter has been brought up with David Lammy, which is the UK's foreign secretary. But he told the UAE side that the government of the UK is not going to get involved in a decision that should be made by the Premier League. We also understand from our sources on both sides that this matter is not really a government-to-government discussion, and that both governments have since then understood that it's a decision for the Premier League, but it's inevitably has had, some kind of impact on the diplomatic relations between the two countries that weren't already in a good place to start, in previous governments in the UK.
Yeah, it's so interesting, Abid. I want to hear more about what specifically your own sources and country officials have been telling Bloomberg about the path forward from here.
Right. So look, we worked on this story across borders, and we've heard from this side of town and we heard from the UK side. And what everyone was telling us is, again, governments are not necessarily, both governments are not necessarily picking this topic of discussion to start talking about when they're meeting. But we know that Prime Minister Keir Starmer was in Abu Dhabi in December last year, where he met the president of the UAE, Sheikh Mohammed bin Zayed. They spoke about plenty of things. They spoke about artificial intelligence, deepening the relationships between the UAE and the UK. We understand previously from our sources that the relationship between the two countries had taken sort of a dent. From the UAE's perspective, what people were telling me was this is mainly because the lack of consistency in the British position. And, we've seen what happened in the UK's government with Liz Truss, Rishi Sunak, Boris Johnson. So the UAE felt like there was no consistent policy making from the UK's end. This has nothing to do with Man City, but, plenty of other things that were going on between the two countries. Man City is now part of that. But with Starmer visiting the UAE last year and sort of mending that relationship, we hear also from both ends that relationship between the two countries, the diplomatic one, is looking upwards now.
Yeah, and don't forget the aborted takeover of the Telegraph by IMI as well. Remember, that was another example of that diplomacy being played out. Bloomberg's Middle East economics and government reporter, Abid Abu Amar, thank you so much. Well, PGA Commissioner Jay Monahan has met with President Trump, asking him to help resolve negotiations with Saudi Arabia's public investment fund. In a statement, Monahan and player directors Tiger Woods and Adam Scott said Donald Trump's leadership has brought us closer to a final deal, paving the way for reunification of men's professional golf. And stay tuned to Bloomberg today, because coming up later, I will be speaking to Scott O'Neill, who is the CEO of Live Golf, ahead of the tee-off of the Round 1 competition in Riyadh tonight. So for all the golf fans out there, this is going to be a big one. All right, coming up, a flurry of share sales is seeing broad diversification across Saudi Arabia's stock market. More on the kingdom's IPO spree next. This is Bloomberg. Saudi Arabia's economic master plan to wean its economy off a reliance on oil sales is showing up in one key area: equity offerings. A flurry of share sales is diversifying a stock market long dominated by banks and petrochemicals. So for more, let's bring in Bloomberg's Laura Gardner-Cuesta. Interesting development. Tell us more about this more recent diversification in Saudi stock markets.
Yeah, it's interesting because over the past few weeks, we've been seeing a number of IPO announcements. We've had an online cosmetics retailer that recently listed. We've had a poultry business, and we've reported that there's probably a car rental company coming to market, a gym company. So really like a whole range of different things, and it's really moving away from this idea that Saudi stock market is just about oil and Aramco. Yeah. Of course, Aramco is still a big part of the stock market, but these IPOs are definitely bringing this sort of diversification to investors.
And does that bring in a new type of investor? Are more foreign investors looking at the Saudi markets to get involved?
So we spoke to some people for this story, and they definitely think that this is part of the reason. Tadawul kindly gave us some figures showing that there has been an increase in foreign investment over the past few years, up to $90 billion worth of foreign investment now. But it's certainly this idea that investors can now take part in this non-oil growth economy, right, and take part in this like companies that offer total diversification away from the oil economy.
Yeah, and what is the IPO pipeline looking like? I mean, in general, how are the numbers shaping up? It's very early in the year, but how was the last, say, 12 months versus prior years in Saudi?
Yeah, so I think the year is definitely shaping up to be quite busy in Saudi. It's been out of the whole region the only market where we've seen, actually no, there's been one in Oman, but where there's been the most IPOs announced, and we're expecting some IPOs from the PIF as well. But mostly what we're seeing so far are these private sector companies, like I mentioned, like from a variety of different sectors coming to the market. So.
Yeah, diversification also showing up in the Tadawul. Bloomberg's Laura Gardner-Cuesta. Thank you so much for that report. Well, it's a big day for the investment community. We've got NFP coming up, and typically you do tend to see quite sizable reactions in the market for the S&P, for fixed income. But trading into the event, we are basically flatlining. S&P futures, NASDAQ not doing a whole lot, though for the week we are actually tracking positive. So we fully recovered from the losses seen on Monday after that tariff scare. So we're going to talk more about that in the next hour of the show. But coming up in the next hour, we'll be discussing more about the U.S. economy and the outlook for corporate credit and debt issuance also on the docket. I'm Joanna Versace in Dubai. Jennifer joins us the next hour as well. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. President Trump signs an executive order sanctioning international criminal court officials who investigate the U.S. and its allies. Meanwhile, he has doubled down on his plans for Gaza. Cautious approach. U.S. Treasury Secretary Scott Bessent tells Bloomberg he favors a strong dollar and has no plans to tinker with debt issuance. And a moment of calm. Investors await the U.S. jobs data later today as focus briefly leaves the drama over tariffs. A weak print could boost expectations for further Fed rate cuts. Well, good morning again, everybody. It's just gone 9 a.m. across the Emirates. I'm Joanna Versace in Dubai. And Jennifer, we have made it to Friday. It has been quite the roller coaster week. Both you and I were out on broadcast duties as well.
I know, and just taking a look at the way that we started the week again and the way that we're ending the week, you wouldn't even know that it's been a week of quite a bit of volatility. But as you mentioned, we are seeing a bit of calm. I'm Jennifer Zabasaja in Johannesburg, where it's just gone past 7 a.m. Welcome to the second hour of Horizons Middle East and Africa.
One of the first things I did when I came in this morning was just to see how equities have done for the week. Because remember, we had that huge pullback on Monday, the tariff scare, the potential imposition of tariffs on Mexico, Canada, China. And of course, the decision was then subsequently delayed. But for the week now, equities are tracking positive, so have pretty much brushed off all of the concerns that we had on Monday. S&P futures today not doing a whole lot, but we are up around 0.2% for the week. NASDAQ also up 1.2% for the week, but crucially not back to levels that we were at before that DeepSeek scare came out a couple of weeks ago. I should say not scare, but news came out a couple of weeks ago. Today, the big focus is going to be NFP. Markets are expecting a 175K headline print. So will that move the needle for fixed income? This is where we are sitting right now, 4.44%. Remember, last time around, it was the catalyst for a major repricing higher in bond yields. Brent also watching closely today. We're up 0.4%, but the energy complex is down 2% this week. It's third week of declines. And this as, again, the oil market starts wondering about the global demand outlook and what the impact of these tariffs could have on energy demand. Switching over, we had the Bank of England meeting yesterday. This was the reaction in the pound. We saw a bit of a tumble, namely on back of the surprise vote out of Catherine Mann, one of the more hawkish members of the committee, for a 50 basis point rate cut. The Bank of England themselves cut 25 basis points, did signal that the path ahead will be leaning towards a gradual rate cutting cycle, but still the investors really latched on to the fact that Catherine Mann had changed her opinion to a 50 basis point rate cut and that the outlook for growth is so weak for the UK economy. So that is the British pound's reaction yesterday in trading. But back to regional news. President Trump has authorized sanctions on International Criminal Court officials who investigate the U.S. and its allies. That's after the court issued arrest warrants against Israeli Prime Minister Benjamin Netanyahu late last year over the campaign in Gaza. Meanwhile, the U.S. president has doubled down on his vision for the Strip, reaffirming he wants the U.S. to take control. Bloomberg managing editor for Middle East and North Africa, Honor Ant, joins us with more. So let's just start with Trump doubling down effectively on the Gaza plans. What do we know about what he's saying? And again, once again, how viable are these plans given the pretty much international universal condemnation that came through in response to them?
Jumana, as you said, he is doubling down on a plan whose contours are largely known, but little else is at the moment. As you said, Trump's earlier suggestion that the U.S. could take over Gaza, effectively moving out, placing about 2 million Palestinians who live there, have served as a source of frustration for regional governments and were outright rejected by some of the major countries in the region, Saudi Arabia, Egypt, Turkey and Jordan. And it really remains to be seen what exactly he has in mind. But what we know for sure is that none of the countries, especially the ones who could serve as a host for displaced Palestinians, are against such a plan, because it basically evokes the memories of Palestinians having been displaced earlier, which basically resulted in decades of conflict. And it doesn't look like there's a plausible way yet where regional governments would be happy to take in sizable numbers of Palestinians who might have to be displaced as a result of the Trump plan on Gaza.
Honor, this is Jennifer here. I also wanted to ask you about this executive order, another executive order that we actually did get from President Trump, this time, though, directed at the ICC for what he says engaging in illegitimate and baseless actions targeting EMEA and our close ally, Israel. What likelihood will we see this actually move forward? And what is he actually looking for with this EO?
I think broadly speaking, the U.S. position has always been that ICC poses a source of threat to American sovereignty in various ways. Actually, the country is not a participant to the agreement that established this court back in 2002, which have since then been basically prosecuting war crimes that until then pretty much went unpunished. Now, having said that, there were periods when the U.S. was more cooperative, such as during the time of Biden administration. But now, President Trump seems to be bent on punishing the court or its members for, first and foremost, I think, issuing arrest warrants for Israeli Prime Minister Benjamin Netanyahu and the country's former Defense Minister Yoav Gallant for the war conduct that Israel has chased in Gaza against Hamas. That seems to be the basis of conflict between the U.S. and members of the court, and the U.S. definitely has means to punish, so to speak, members of the court. I think the executive order is basically it's mainly about both freezing financial assets that some of the court officials might have in the U.S. or their relatives, and denying them visas to enter the U.S. Right. That's at the heart of the executive order that's being signed, Jennifer.
Right. Yeah, we'll see where things go from here. Bloomberg managing editor for Middle East and North Africa, Onur Ant there joining us. Onur, always great to get your insights. Thanks so much. Now let's stick in the U.S. U.S. Treasury Secretary Scott Bessent tells Bloomberg he has no plans at the moment to adjust policies on dollar strength or debt issuance. It shows a cautious approach towards financial markets, even as the administration is rapidly upending the status quo elsewhere.
First of all, the strong dollar policy is completely intact with President Trump. And I was very happy at his Economic Club of New York speech in August when he reemphasized the importance of maintaining the dollar reserve currency status. But let's think about, what does a strong dollar mean? It really means four things. One, that when we think about a fiat currency, a piece of paper is credibility. So a strong dollar is credibility and a rule of law that is backing it up. 2, it means a composite price on the screen, the Bloomberg Currency Index, that is the dollar moving up against that. 3, it is a bilateral price. So what's important to remember is the dollar is either weak or strong versus something else. So we want the dollar to be strong. What we don't want is other countries to weaken their currencies to manipulate their trade. And then 4th, that we want to have the best policies that create the environment for a strong dollar.
Yesterday, the Treasury Department had its first quarterly refunding since you were confirmed. Do you have any plans of looking at how the Treasury's debt issuance strategy comes together?
Well, I think the good news is that the trajectory of the borrowing is dropping. So I was very happy to see that it's one of the few good surprises I was left by the previous administration. So the trajectory is good, and the government's well-financed into the 3rd quarter, and I believe that as it becomes apparent that the president's agenda is working, that we'll see a great deal of non-inflationary growth. And I think that will help us calibrate what the debt policy should be. But I don't foresee any changes in the issuance for the foreseeable future.
Mr. Secretary, I want to ask you if you have had your traditional weekly meeting with Fed Chair Powell yet.
We did. I did an away game over at the Fed. We had a very nice breakfast. Chair Powell and I don't know each other well, so it was very constructive.
How do you view that relationship involving the two agencies and buildings are supposed to work very closely together, and you've had some criticism in the past of his work?
And as I said at my hearing, everything I'm going to talk about is things the Fed's done in the past. Prospectively, monetary policy, I will not comment on. And I'm sure he's going to do the right thing. So there'll be no criticism.
That was U.S. Treasury Secretary Scott Bessent there speaking with us yesterday. Now, plenty more ahead on Horizons this hour. We'll look at the markets ahead of U.S. jobs data with UBP's Eleanor Jolidon. Then later this hour, Barings' Omotunde Lawal joins us to talk corporate credit. And Samaila Zubairu from the Africa Finance Corporation is also with us. A packed show this morning. Stick with us. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Chinese tech stocks helping lift Asian markets today as traders await U.S. jobs data that may help shine light on the path ahead for interest rates. Joining us is Eleanor Jolidon, the co-head of Swiss and Global Equity at UBP. Well, it's great to have you with us on the show, Eleanor. You know, I'm not actually going to start with a question on NFP. I do actually want to hear your take on the huge amount of tech earnings that we've had over the past week and the fact that the reaction, and I was speaking to our tech reporter early on the show, for most of them has been initially quite negative. And it feels as though expectations are so high here. It's been very difficult for these tech companies to actually win over investors. What is your take on what we've heard from some of the big tech names?
Well, we as investors tend to look towards the future as opposed to looking at the past. So you can have good results. The problem is what you're guiding for in the future and how credible is that guidance into the future. And there has been a lot of news flow in January. And if guidance has been a little bit more disappointing as compared to not necessarily consensus numbers, but maybe whisper numbers that were around, be it tech, be it any other sector, that is what is going to lead to share price reactions.
What do you think the leadership in U.S. markets is going to come from this year? Will we continue to see the concentration of leadership in those handful of stocks, or do you expect a broadening out?
We do expect a broadening out, but we would continue to see opportunities and a lot of interest in technology. It's clear that if we want to see improvements in the growth strategy, not just in the US, but globally, we absolutely need to see improvements in productivity. And as unfortunately we can't necessarily rely on everybody working harder, it would be good if there was an injection of technology which would aid that higher productivity. And so there will be continued interest in that space. But these companies have been growing very, very fast. And within the tech sector, obviously, there are subsectors. And we may see a change in leadership within the tech sector, maybe a gradual move away from some of the hardware names which have been performing so strongly, more towards names in the software field, which are going to be the true users of new technology and also the areas which will be the greatest beneficiaries of what we hope will be improved productivity from that in that new technology. Added to which there will be obviously the big debate, and that also is something which is first and foremost in investors' minds at the moment, about the monetization of some of the incredible technological advances that have been made. Technological advances are good, but they actually need to have a price attached to them. They need to have a benefit, profitability attached to them. And that's what we need to see now in a broader universe than what we've seen as the initial beneficiaries.
Eleanor, do you feel that way even when you look to Asian equities? We were mentioning Hong Kong's Hang Seng Index doing quite well, at least to start this Friday. Do you share the same sentiment for the other side of the world?
Well, absolutely. It's not just the other side of the world. The world is round, obviously. That means that we've got a number of different geographies in which we can invest. There are different valuation levels, be it in Asia, in Europe, and in the United States. And I would not be surprised to see investors considering where they can find value creation, as we see in the United States, in other markets, but perhaps at lower valuations, more attractive pricing than what we're currently seeing in the United States.
Eleanor, let's pivot to the NFP print today. Many investors are paying close attention to that specific number that we will get, but also to the revisions potentially that we'll get for the path ahead for the Fed. What is your focus on? What will potentially affect how you're talking to your clients and investing moving forward?
We've had very healthy numbers as far as the labour force is concerned in the United States, and that has perhaps been one of the elements which has fed into the more cautious discourse that we've heard from the Fed in their more recent statements. I would say that everyone in the investment community is very focused on inflation and the risk that inflation could pick up, and of course labour markets feed into that if they do become tighter, perhaps in some cases driven by some of the policies that we've been hearing about from the new administration, that could be an issue. We won't see that in these numbers this time around, but we're certainly going to be watching the trend. The US economy is incredibly healthy, and we've had this period where inflation has gradually trended down, but perhaps not at the speed that anybody, we're always more greedy than we can be. And but the problem today is there a risk that some policies, some strength in the economy, simply without any policies affecting that, could lead to stronger inflation numbers, and that would be then a cause of concern for economic development.
Excellent. Thank you so much for joining us today on the show. UBP co-head of Swiss and Global Equity, Eleanor Taylor-Jolidon. Thank you so much. Well, coming up, we unpack Amazon's earnings as the company ramps up spending on AI. This is Bloomberg.
Welcome back to Horizons, Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Amazon shares under pressure in late trade after we got a weak outlook in its latest results. The e-commerce giant says it plans to invest some $100 billion in AI this year. We will take a closer look at more of what the CEO, Andy Jassy, did say when he did give those comments after we got the earnings. One of his comments actually calling AI a once-in-a-lifetime business opportunity. So let's bring in our tech reporter, Annabelle Drulers, for more. So, Annabelle, what stood out to you in the numbers and also in the commentary that we got from Andy Jassy?
Yeah, there was really a lot of different things to pass over in the figures. I think in terms of front and center is really what is their sort of expected spend around AI in particular. And you were just mentioning there that spend $100 billion for 2025. It's a huge, huge number. It's bigger than what they spend in 2024 as well. But the vast majority of that is going to be going to continuing to build out its AI infrastructure, essentially, so they've got that compute power. It's something else that came up in the Microsoft earnings, for instance. They were saying that essentially they could end up being hamstrung if they don't have the amount of services to meet the demand. So there's certainly doubling down on that, even though at a headline level, looking in the outlook, there were a couple of concerns there because they're saying revenue guidance isn't going to be quite what Wall Street had been tipping, so between 151 to 155.5 billion for the first quarter. And they're also just sort of saying one of the reasons for that actually is the FX cost, because they're saying that is actually going to be costing them $2.1 billion in headwinds, essentially, from foreign exchange costs, something that came through in the fourth quarter figures as well, that stronger dollar dynamic. I mean, it doesn't appear to be dissipating anytime soon.
And Annabelle, with the bad does come the good, right? What were some of the bright spots in what we got on Thursday?
Yeah, so the brighter spots as well, this was interesting because in the call, listening at the beginning of it with the earnings release, we of course heard from the CEO, Andy Jassy, and actually spent all of it initially talking about what was happening in the e-commerce business and sharing an update on that part as well. And actually, for the fourth quarter figures, they did well, essentially reporting revenue of $188 billion or thereabouts. That was a jump of 10% year over year. Operating income as well, that increased more than 60% year over year. So from an e-commerce perspective, they're continuing to expand in North America, in markets outside of that region as well, and also adding things like more prime customers, for instance, paying customers for expedited delivery. They're saying that, that is continuing to accelerate. Streaming as well, that's continuing to accelerate. So there are brighter spots in that area of the business, even though coming back, of course, to the AI focus, they are going to be spending heavily, and there's still concerns around sort of the monetization of that, and also the impact of DeepSeek, which came up in the earnings call as well, although Amazon sort of tried to downplay that risk, saying that essentially we're going to be entering a future where people are going to be using a lot of different models depending on the type of customer you are, and so there's space for DeepSeek to exist, but also for large language models as well.
Yeah, just adding to a lot of those mixed results we've been getting from tech. Tech reporter Annabelle Drulers, though, with an update. Annabelle, thanks so much for joining us.
Now for a look at some of the other stories we're following today. South African President Cyril Ramaphosa says his nation will not be bullied, using his State of the Nation address to decry the rise of nationalism and protectionism. Ramaphosa spoke after U.S. Secretary of State Marco Rubio said he would not attend the G20 summit in Johannesburg this month. Earlier this week, President Trump falsely accused South African authorities of seizing private land.
We will not be deterred. We are, as South Africans, a resilient people, and we will not be bullied.
Just hours after Rubio's comments, China expressed its support for South Africa's G20 presidency. Beijing's ambassador held talks with a South African minister to discuss the two nations' bilateral relations. South Africa will be the first nation on the continent to host the G20 summit later this year. And And a look at some of the key markets as we head into that NFP print much later today. The market is anticipating a 175,000 headline print. Equity futures leaning towards the red, slightly below the flat line. Euro Stoxx futures down 0.3%. But for the week as a whole, it has been pretty positive for Wall Street, brushing on some of those tariff concerns. Now, coming up, our next guest says EM corporate primary markets have had an active start to 2025. We'll talk credit with Omotunde Lawal from Barings next. This is Bloomberg.
This is Horizons Middle East and Africa. Our top stories this morning. President Trump signs an executive order sanctioning international criminal court officials who investigate the U.S. and its allies. Meanwhile, he's doubled down on his plan for Gaza. Cautious approach. U.S. Treasury Secretary Scott Bessent tells Bloomberg he favors a strong dollar and has no plans to tinker with debt issuance. And a moment of calm. Investors await the U.S. jobs data later today as focus briefly leaves the drama over tariffs. A weak print could boost expectations for further Fed rate cuts. It's just gone 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg. Jumana, we made it to Friday.
We did, TGIF, my friend. But it is a big day coming up for markets today. We've got the NFP print. And, of course, the market is still digesting some of the tech earnings coming through, Amazon and after hours. So we're not completely out of the woods yet, Jen. There's still work to do on this Friday. Welcome, everybody, to the second half of the second hour of Horizons Middle East and Africa.
That's right. And it's still, if you take a look at markets, just looking a bit mixed ahead of that NFP print that we are going to get later today. But you wouldn't think it's a bit of calm, especially how we started the week with a lot of that concern over the trade tariffs, appearing, though, like we are seeing a bit of at least stability right now. If you take a look at NASDAQ futures, marginally down, but we mentioned Amazon in those earnings after the bell. Amazon falling in after hours trading, following those results that showed projected profits for the current quarter below analyst estimates. We were just speaking with our tech reporter Annabelle about that and some of the headwinds to come from a lot of these tech giants. NASDAQ closing Thursday in the green, set for a weekly drop, though, again, amidst that concern around AI and tech spending. The Bloomberg dollar trading positive, but that's following 3 days of losses. And again, we are awaiting that U.S. jobs data, but potentially a bit of benefit for the dollar. We did hear Scott Bessent saying he doesn't plan to tinker with it most. I'm sticking with FX too and looking at the Rand. We were talking about President Cyril Ramaphosa speaking on Thursday night, giving his State of the Nation. Right now, we're seeing the Rand unchanged for the most part. We did see 3 days of strengthening against the dollar, and President Ramaphosa pushing back on what he says is some bullying by the U.S., which is, again, how we started off the week. Gold is also marginally up, just about 0.3% after we saw some traders taking profits yesterday, trading near $2,864 an ounce. And just to zero in on this NFP print just a bit, we'll get it later today on Friday. We have Bloomberg survey of economists signaling 25,000 employment rise in employment, and that is the expectation. But for the non-farm payrolls print, if we can bring up that full screen, the estimate is 175,000 there. And the focus will be on what revisions we potentially get to what we have seen over the past few months. And again, what that means for the path ahead for the Fed.
Yeah, and even that average hourly earnings figure as well as a sign of wage inflation or indicator for wage inflation. Well, corporate debt is priced for perfection, even as risks of stagflation rise. That implies a bigger credit market reckoning if consumer prices stay high and the economy buckles under the weight of escalating trade wars. Joining us now is Barings Managing Director and Head of EMEA and EM Corporate Credit, Omotunde Lawal. Really good to have you with us on the show. Let me just start off by asking you about how, broadly speaking, the environment has been for EM credit this year, because 10-year treasuries have sort of stabilized around 4.5%. What is the knock-on effect been to credit spreads?
So credit spreads have ground tight. I mean, every asset class, every fixed income asset class you speak to, everyone talks about spreads at all-time tights. I think US was sort of close to the low 70s. European IG spreads were sort of inside of 100. EM corporate spreads, actually, back in November, we touched sort of 190. Now we're around 200, 205, which are close to all-time tights, at least post-crisis tights. And yes, optically, these sort of spreads look like they're getting tight and maybe they're priced to perfection. But what we focus on actually is all-in yields, right? All-in yields are still very attractive.
Well, that's what I was going to say. The spreads may be very tight, but an absolute yield level, you're talking about yields of, in this case, 6.5%, right?
Exactly, exactly. EM corporates at the SEMBI, the JP Morgan Corporate Index, all-in yields are sort of 6.5%. And you decompose that actually within the IG bucket, yields are around 5.6, 5.7, and high yield yields are around 8%. So it's still quite attractive when you're thinking about it, despite the spread.
Has there not been any hit to credit because of all of the talk around tariffs and what that could mean for global demand and the global growth outlook?
Yeah, it's certainly a period of nervousness, I would say, certainly in terms of investors putting cash to work. There has been some concern around the impact of tariffs, redirection of supply chains and trade flows as well. And so naturally, that makes investors a bit nervous about certain regions and certain sectors. So we've seen at the overall sort of index level a slight widening of credit spreads. But I think what you get there is more than offset by the risk-free return, where when you decompose year-to-date returns, for example, the biggest portion of the returns is actually coming from the rates rather than the spread. So spreads have widened slightly, but not materially. And then you look at pockets of places like Mexico, yes, spreads did widen, but actually they partially corrected. And I think people pick through the details of it. And that's why active management is very important, because, yes, your headlines tell you that tariffs would impact Mexico or it impacts China. But oftentimes there are winners and losers within that also.
Yeah, and obviously the carry trade has been a big theme here. And I just wonder, just one final note, if the Fed do end up keeping rates in restrictive territory, does that impact where investors want to be positioned on the EM credit curve?
So if the Fed stays at sort of relatively high levels where we are right now, actually what we advocate for corporate issuers, which is what I've been talking to some of the CFOs and the treasurers that I saw at the conference in Riyadh this week, is you've got to think about building resiliency into your capital structure. It's really about making sure that you have diversified sources of funding and you're tapping your local markets and you're tapping dollar market. You're having a good mix between fixed and floating rate debt, public markets and private markets, and it's sukuk versus unconventional, conventional bonds as well. It's about building that resiliency so that you can blend out your average cost of funding.
And what have you seen in the region? You just said that you were in Saudi Arabia. Saudi Arabia kicked off the year with quite a chunky issuance.
Yeah, it's been a busy time.
It's been a busy time, of course, but I'm curious to see how you see the outlook from an issuance perspective, sovereign levels from this part of the world.
Yeah, we're expecting a huge amount of activity from the GCC region in general. I mean, January was a very strong start to EM corporate issuance. We had just north of 65 billion of supply, and about 15 billion of that came from the GCC region. Saudi was a big component of that. We've had PIF come through. We've had Saudi Fransi, Bank Saudi Fransi. We've had Al Raji. We've had a few of these. Yesterday, we had the debut issuance for the Saudi Arabia Mining Corporation. Stunning books. I mean, the books were about 11 billion for a $1.25 billion issuance. That's the kind of demand that there is for Saudi
You're
supply.
almost as passionate as fixed income as I used to be back in the day. I do want to ask you about denominations as well. I thought it was interesting last year that PIF actually issued a sterling-denominated bond. Would that have been a reverse inquiry? Is it that there were a lot of investors looking to get sterling-denominated access to the Saudi market? Why would a deal like that come to fruition?
That's a very interesting question. And I think that's part of what we talk about, building resilience into your capital structure and diversifying your end buyer base. So PIF comes to the dollar market. They've done sukuks, they've done conventionals. When they came with the sterling issuance, it was a bit out of the norm.
Yeah.
But actually, it allows them to tap into a different market. You know, PIF is investment grade rated. You have a huge amount of pool of capital that seeks euro-denominated investment grade
instruments, they tap into that. And actually the information from the PIF guys also is they try to match also their needs in different currencies as well. So there was a natural need, I think, for one of the portfolio companies for sterling funding. And so it was a natural sort of mix in them. And I think in 2025 as well, we will see them potentially do another sterling issuance and maybe other currencies.
Interesting. Really good to chat to you. Tunde Lawal, Managing Director and Head of EMEA and EM Corporate Credit at Barings. Thank you very much.
Great conversation there. Let's turn to the Bank of England Governor Andrew Bailey. He's cautioned markets against reading too much into how policymakers voted this month. The comments come after a surprise switch by one official boosted bets on more interest rate reductions. Governor Bailey spoke to Bloomberg's Guy Johnson after officials decided to cut rates to a 19-month low.
The way I would interpret it is this. The sort of the set of things that we are going to have to judge every time we meet has just got more complicated, frankly.
Does that make it harder to make a decision to cut rates? Because as you say, it's symmetrical. You don't know whether it's going to be inflationary or deflationary.
It's going to give us a lot more to think about every time, and we're going to have to be careful in the way we do it. But it's meant to say, look, there is more uncertainty. Don't take from that a particular directional message, other than I still think the path is down.
Yep.
But the world is more uncertain.
Are you still trying to get to 100 basis points worth of cuts this year?
Well, I've never been trying to get to a number, actually. I mean, I'm trying to get inflation sustainably to target. That's my job. Right. Whatever path of interest rates does it will be the one.
Can you understand why the vote split looks dovish?
I can, but I would always caution you not to put much emphasis.
So it's not a communication tool?
It's not a communication tool. And the reason it's not a communication, we do not sit down and say, what do we want the vote split to be this time? Each member votes their own position. I don't know going in what the vote's going to be in that sense. The reason, and I always say, there's no groupthink on the MPC. People vote their own position. You can, and I would encourage the market to read the minutes pretty carefully this time, because you will see a series of positions set out in the voting. There are those of us who voted for the cut, some of whom put emphasis on uncertainty and the word careful, some of whom wanted it to be a bit more directional and wanted the word cautious instead of careful, but we chose careful in the end. And then you've got the two members who voted for a larger cut, and if you read the paragraph that comes over, they're probably in different places themselves, so don't put too much weight on the voting.
The gilt market, at its core, really only cares about inflation. That's its kind of North Star. What's your degree of, let's come back to the word certainty, that the inflation hump is just a bump in the road? Given, as you just said, there are so many things that are uncertain at the moment, how can you be sure that that is a bump in the road that doesn't persist, and ultimately the trajectory is still there?
Well, there are two things that caused me to take that view today. One, it's not being produced by things that are caused by the underlying balance of activity, supply and demand. So it's not giving us a read on the underlying balance of the economy. It's being caused by largely administered and external market factors. Now, the second thing is, but you could say, yes, but it could still get built into expectations and persist, and it could. But what I would say then is that context is important. It is against the context of a weakening of activity in the economy. It's a context where the labour market has moved more into balance. So I think that's the right context to see it in as well. And that context then would tell you, probably more likely than not, it won't cause persistence effects. But we will have to watch it very carefully.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. The Africa Finance Corporation, the continent's leading infrastructure solutions provider, has successfully raised $400 million in Sharia-compliant commodity Murabara facility. The move marks the firm's strategic return to the Islamic finance market for the first time in 8 years. So joining us to talk about it is Samaila Zubairu, Africa Finance Corporation Operations CEO. So Samaila, thank you so much for joining us. Let's just get straight to it. 47% oversubscribed. You're expecting to actually get to 300 million. Where do you think this interest came from? What is it centered on?
Really, it's about the growing appeal of our credit and the opportunities in Africa, and the fact that we're seen as a reliable, resilient bridge, for global capital to flow into Africa. And that's really where it's coming from. And we're very happy that we're able to raise $400 million. We have new institutions supporting us, and we have our traditional banks, all working with us. So we're very pleased with this outcome. In fact, we're having conversations around a way to return to the sukuk market. That has been a little bit of a challenge for us. But we'll see if we've given the opportunity back to the banks to frame a way for us to issue a sukuk. And we're happy to do that. We're always looking at how to diversify our funding sources, and it's important that we tap this.
So, Samaila, what are the plans for investing this capital? I mean, I spoke to you just a few months ago. You said there were a number of projects on the continent that you were looking at. Now that you have these investors coming in, how do you plan to move forward with the capital?
I mean, we have a pipeline of, at any point in time, $4 to $5 billion of investments. We screen that, and try to find the one that makes the most sense for us to deploy, and we are able to deploy on average $2.5 to $3 billion annually. And so we'll continue to look at our pipeline. I just came from the mining in Daba, early this week, and there's a lot of demand for capital for both, mining, capital for connecting, the mines, capital for transforming, the output of the mines. Capital that allows us to create more jobs, to address our growing demand for urbanization. So a lot of capital is required. And, we're working on several projects as lead developers. So it's just a lot to do, and we're the people to get it done. So we'll continue to find ways to raise the capital to get it done.
What have been the conversations, though, as you've been in the GCC talking about this most latest bond? What are they looking for in terms of projects and investment there?
So, I mean, it's really looking for a good partnership, looking for good partnerships that allow them understand the risk and manage the risk. They're looking for avenues to deploy more capital into the region. They see the growth opportunity that the African demographic opportunity and African urbanization opportunity present, and they're happy to work with us, to tap that market. Some of them are actually thinking about setting up offices, in Lagos, in Nairobi. Some of them want introductions to governments. They want to work with us. They're asking for A loan, B loan structures that allow them to participate alongside us, as we take risks. So it's a very, very promising and very exciting opportunity, for Africa to be able to get more from the GCC.
Do you expect to see more investment then in 2025 from the GCC? You're saying they're planning to set up offices. Have there been discussions about even more investment to come?
Certainly. I mean, yesterday we were talking about the significant opportunity to integrate, the continent, the opportunity to connect the continent, the opportunities arising from the African Continental Free Trade Area, the opportunities for, I would say, integrating the value chains for food security. So the priorities here around food security, around industrialization, transformation, digital efficiency, logistics and ports. I mean, we're having all those conversations, and they see the need for us to find a way to work together. And we have a couple of initiatives that we're going to work together.
Samaila, how does this affect the timeline for potential Panda bond issuance? Are you still on track for that in 2025?
Certainly. We're actually having a conversation with a lot of investors, and we hope to be able to build on the recent credit ratings that we got, from both S&P Global in China and Changing. International. We got AAA credit ratings from them, so we are looking to access the market for a panda bond. As we are looking to tap the Samurai market as well and the Korean market, where we have current exposures, we seek to renew those relationships. We have a funding plan of over $4 billion this year, and we're looking to tap all those markets, including going back to the syndication market.
So we should see that by the end of 2025. That's the expectation there, Samaila?
Yes, even before the end,
okay.
We would see a lot more transactions.
Great. Well, we have to leave it there. Appreciate you joining us. That's Africa Finance Corporation CEO Samaila Zubairu joining us there. Now we're going to stick in the region, and coming up, leaders in East Africa are meeting to discuss the conflict in Congo. We'll have the details on that next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. African leaders and policymakers will meet today to discuss the ongoing conflict in the Eastern Democratic Republic of Congo. This comes as the DRC still awaits humanitarian aid after almost 3,000 people died in fighting between its forces and Rwanda-backed M23 rebels. Bloomberg's Zubairu Ganga joins us with more and has been following this story from the outset. Let us start off by talking about the resumption of this fighting, the aftermath of the fighting. We're just talking about over 3,000 people having lost their lives during this conflict. Where are we right now?
Hi, Jumana. So the UN says that they've retrieved 2,000 bodies from the streets. 900 are still lying in the morgue, and they expect this number to continue going up because there are bodies that are still decomposing in the streets, which is raising the risk of diseases. The airport is still closed, which is limiting access to basic goods like water, food for nutrition, and also medical supplies, and it's leaving the city in a really critical state. And this humanitarian crisis is unfolding at a time where there's a funding freeze on USAID, which is the biggest donor on humanitarian grounds to the Democratic Republic of Congo in 2024. They provided $916 million, and the UN fears that this freeze on funding is going to impede humanitarian assistance in the region.
There is a heads of state summit taking place over the next couple of days. Can we be optimistic that they can get to some form of a resolution, Andiro?
Cautiously optimistic because hard lines have been drawn on the ground. President Kagame says the country is not backing M23 rebels, but when tasked to clarify if they are running forces in the eastern part of DRC, he said he didn't know, maintaining plausible deniability. Tshisekedi did not show up for the first summit, and instead he opted to do a televised address saying they're going to fight back, and M23 have resumed fighting, breaching a ceasefire. So SADC and EAC have their work cut out for them in trying to soften these grounds fast before we head towards a peaceful resolution or a political resolution.
Bloomberg's Zubairu Ganga, thank you so much for the report as we continue to monitor the developments in Goma. Well, a quick look at equity futures, not doing a whole lot, but for the week we are tracking positive, having fully rebounded from the big nosedive that we had on Monday. So S&P is actually up 0.2% for the week. NASDAQ up 1.2% for the week. This despite the fact that Amazon earnings have disappointed investors in after hours yesterday. Eurostoxx futures leaning towards the red. But stay tuned to Bloomberg today because coming up later, something for the golf fans out there. I'll be speaking to Scott O'Neill, the CEO of Live Golf, ahead of the tee-off of the Round 1 competition in Riyadh tonight. So I'm really looking forward to that one. And that was it for Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai with Jennifer Zabazaja in Johannesburg.